When you're trying to build a book of business, it's really hard if you've got a lot of customers leaving out the back door. Think about it this way. If you're trying to grow by 15%, but you're losing 15% of your book every year, that means you actually have to have double the production. But if you're only losing 5%, your life gets a lot easier. And the thing is, if you're starting your renewals 30 days before, it's way too late and you're way behind. So in this video, I'm going to walk you through the process that I use. It's helped me build $1 million book of business and get referrals so that you can implement it and start working on building your $1 million book of business. Let's get into it. When I talk about renewals, I think it helps to start at the end and work backward. And the goal of a renewal should be to have it locked up to at least 2 to 4 weeks before the renewal. But in order for that to happen, a lot of things have to fall into place. We have to have underwriting information from the customer. We have to have quotes from the underwriter. We have to have approval from the customer. And we have to make sure that what is being accounted for in the renewal matches what the customer wants, which means we have to build in enough time to sell the renewal. That's why you need to start at least 90 days out, and depending on the size of the account, 120. And it should start with a renewal strategy call with your customer. This is before you've had any conversations with the underwriter. You're not asking about underwriting information from the underwriter. It is a conversation with the customer to go over a few different things. One, are there any changes to their business or operations that need to be accounted for in the renewal? Buildings, vehicles, equipment, payroll, operations. Next, you need to diagnose if there's been any customer service issues in the prior year. Have there been problems with claims, problems with certificates getting turned around? Maybe was there an audit problem? But figure out if they've had problems with the company or with the customer service team, and then work on fixing them. And next, you need to figure out what they want to do in the marketplace this year. And that's got to be part of a long-term strategy that you developed with them. If they just went to market last year, that's got to be a really good reason if they want to go to market this year. But you need to hammer that out with them. Now, one of the best ways I've found to develop that long-term strategy with a client is to keep them updated on the marketplace every year and prepare them. And this definitely needs to be a part of your conversations. You need to be telling them what they should expect out of their renewals based on what's going on in the marketplace. Preferably, if you can break down line by line, that's ideal. Now you can start to look like you can predict the future. And there are sources that'll give you this information, like the Xywave Marketplace Report. It'll tell you line by line what you should expect. And then you should be prepping your customer for that. So, if they're a real estate organization and the property insurance marketplace is terrible, you tell them, hey, look, you need to understand that it's really hard to buy property insurance right now. And so as a result, based on the characteristics of your organization, I'm expecting anywhere between X and Z because of who you are. And it doesn't matter who we talk to. It's just that this is what's going on because there's more storms in your part of the country. Companies are trying to trim back on wind and hail exposure. So it doesn't matter if we talk to company XYZ, they're all doing the same thing here. You just need to be prepared for that. Now, sometimes you can also say, look, X, Y, and Z is happening in the marketplace. If you do this, it's going to help you negotiate for better terms. But that's all part of the renewal strategy session. You are talking to your customer about how you are going to frame them for underwriting this year and what reasonable expectations are. Once you've had that conversation, it's also easier to ask for referrals. One of the things my mentors taught me is that you should treat service calls like sales calls. It's an opportunity to gain goodwill with your clients and then ask them to introduce you to your friends. See, that's the thing. If people like the way you take care of them and like the way you treat them, they'll tell their friends. And the hardest thing we do as producers is to get a new lead. Yet one of the best sources for new leads is referrals. And the way you get those referrals is by servicing the heck out of your clients. You make them tickle pink so that they are going to their friends and saying, no, 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 you got to talk to my guy because he helps me get the best deal. He talks to me. There are no surprises. His team is great. The companies he uses are awesome. They pay claims. You got to work with him. And that helps you build momentum in your book of business. Now, after you've had your renewal strategy call with your customer, now you got to get into the logistics of the renewal. Hopefully, you got a team that can support you on this, but you got to get out in front of your insurance companies to figure out what they're going to need for the renewal. And my experience with companies is they'll get behind. They don't work renewals in a prompt fashion all the time. So, as an agency, as a broker, we have to prompt them and say, "Hey, 90 days out, what are you going to need for this renewal?" And sometimes you'll get pushback and say, "Hey, man, I'm still working on renewals a month from now. I'm not even looking at that." Here's the deal. If something goes wrong with a customer's renewal, they're blaming you. They're blaming me. No questions asked. So if that's how it's going to shake out, I'm not accepting any excuses, and neither should you. If we have to deliver results or we're going to get fired, then by God, let's deliver results and let's not accept excuses from the people around us. So when the underwriter says, no, give me 2 months, it's like, no, no, no. The goal is we need to have this renewal done 2 to 4 weeks in advance. And if you're not going to help me accomplish that goal, I need to find somebody who's going to help me accomplish that goal. Now, the thing is, once you develop a relationship with your companies, and your underwriters want to lock up renewals early too, once they realize that you're really in alignment, and the goal is to get terms in place that everybody can agree on so we can all move on, people will work with you. It's just going to be the first couple where they might push back a little bit because they think you're messing up their workflow by trying to get in the front of the line. But once they realize that if they work with you, they're going to preserve their book of business, you're going to get what you want. It's going to work a lot better. So ideally, you're going to have information from your underwriters showing you what they're going to need to renew at least 75 to 90 days before the renewal. Honestly, if it's closer to 60, that's just being real. It happens all the time. You have that, you get it in front of the customer, you tell the customer, I need this information in 2 to 4 weeks. We all know customers are slow. We ask them, we ask them, we ask them, and then they sit on information for 2 months, and then the day that they send you information, they say, hey, when can I expect a quote? It's maddening. It's crazy. They do it all the time, and they're just totally tone deaf in how they do it, but that's what happens. So in a sense, what we're doing with this process is we're covering our own tail so that if something goes sideways on the other end of the renewal and they're saying, I didn't get what I wanted, you, as the broker, are prepared to say, I understand, but we have this process and you did not meet your end of the bargain here, here, and here. If you want better results, I need you to do X, Y, and Z differently so that we can work this system to get you the best results. But I need your participation in order to deliver that. And then they get a little bit sheepish and they realize they're not in the driver's seat and they're like, oh, yeah, you're right. I did reschedule on you 3 times. That might make it a little bit hard to do your job. So, yeah, you're right. I'll work on that next time. But but that only works if you have a system. So anyway, you know what your underwriter needs 75 days in advance. You get it to the customer, tell them, hey, I need this in 3 weeks so that like right around between 45 and 60 days, you've got a complete file to get it rated by the underwriter. You get it to the underwriter. There's no excuses why they can't have that rated 2 to 4 weeks in advance. And if you've already discussed the account in high level with the underwriter, here's the thing. They know the pricing they need to get on the renewal. They know the coverages that they're probably going to need to trim. They may not know the exact pricing after they get the exposures, but they know the changes they need to make. So here's how you need to mentally approach renewals. You need to segment the increases into 2 parts. There's the part that changes because the business changed. If the payroll went up, if the building values went up, If the sales went up, if there's more vehicles and equipment, if there's risky drivers, that all changes pricing. That has nothing to do with rate increases from the company. But what the underwriter does know is this is the pricing amount that I'm going to need to get in order to hit my goals. And I'm going to need to restrict wind hail coverage, or I'm going to need to limit sexual abuse coverage, or whatever it is for your industry. They know those things. They can tell you those things at 60 to 75 days out when you're talking to them. And as long as that's in line with the marketplace, you can either approve or deny based on the experience of the client. So you can have that negotiation with the underwriter long before you have the underwriting information to actually rate the renewal. And so you do all those things. By the time you get the renewal 2 to 4 weeks out, you should have talked to the customer about what the marketplace looks like. You should have talked to the underwriter about what they're doing to verify it's in line with the marketplace. And just as long as the renewal comes back and the underwriter's delivering what you talked about, the customer should be prepared. You got a winner. Everybody's happy. It goes smoothly. It's when you don't work that system and there's surprises, that's when the customer gets mad. Here's what I found over and over and over again. Customers can deal with increases and coverage restrictions as long as they're prepared for it and they understand why it's happening and they're given a chance to fight against it. So give that to them and you'll be fine. And you can a lot of times frame that as a partnership with the insurance company so that everybody wins. We're working for profitability for the company. Because if the company's not profitable, they can't offer insurance. But if they can't offer it profitably, what the customer really wants is long-term sustainability with a good product. If you work this system, I promise it's going to make your renewals more predictable, less stressful. You're going to feel like you're collaborating with your customers. It's going to be easier to ask for referrals, and your underwriters are going to love working with you. It's going to help you build that $1 million book of business that you're trying to get. Well, hey, if you got any questions, drop them in the comments. Thank you so much for watching. If you got questions you want to ask me, reach out to me on LinkedIn. My contact information's in the description. As always, thank you so much for watching, and please go build something great.